Let's understand a little bit better what exudes this kind of confidence. We have with us Mr. Y.S. Chakravarti, MD and CEO at Shriram Finance, joining in on the show right now. Right. So thank you so much for taking the time out and joining in today. You've had a strong third quarter with margins that have already exceeded your previous guidance. Tell me, how is it that you look at your NIMs from here on, and what are you guiding for FY25?
See, as far as spreads are concerned, we are not, I think we already mentioned earlier also that our net spreads will be around 4.2, 4.3. I don't think there would be any change in that. I think one reason why the AUM has fared better, or the business has fared better than anticipated at the beginning of the financial year, was that the merger synergies have really worked between the erstwhile Shriram City Union Finance and Shriram Transport Finance. So we were able to leverage those synergies and push business, particularly on business loans, passenger commercial vehicles, passenger vehicles, both personal use and commercial side. They have actually contributed to a surge in this growth of business.
Now that interest rates have peaked out in the system, liquidity seems to be much more stable than what it was a year ago. What happens to your borrowing cost? What happens there?
We'll have to see. Right now it's steady, but we'll have to see. As you know, we have just raised about 300 million at 5.85. So, I mean, basically it's overseas funding, but it's better than what we anticipated, almost 30 bips lower than what we initially priced at. So I think going forward, we should see a good, at least 25-30 bips decline in borrowing rate.
And the borrowing breakup for you is term loan is 25%, public deposit is 25%, NCD is 18%. So what would be the source of funding in future? Because all of them attract different tenures and different tax rates and different cost of borrowing.
Yeah, we don't anticipate borrowing from banks to go up. So it would be mostly bond market, retail fixed deposit, and probably the overseas borrowing.
Exposure to gold loan, and given that Reserve Bank of India in a sense is scrutinizing NBFCs for gold loan, what is the update there? Are you committed to grow the gold loan business, and what's happening in industry? What kind of impact that will have on for you?
See, for us, actually, as of today, if you look at our gold loan, it's just about less than 3% of our AUM. So, but it's still an important component. We would like to grow this business, and I don't see too much of a constraint with what RBI's stand. I think it's also justified in some ways that, see, it's important that probably the regulator is looking at curbing probably, the idea could be that money shouldn't be laundered, and they would be looking at probably stricter compliance on the KYC side, which is not an issue. I don't think that's an issue.
Right. You were talking about how your overall net spreads continue to be at about 4.2 to 4.3%. Can you share any details in terms of your margins as well? Is it going to remain steady despite the slight change in the borrowing mix?
Yeah, actually, see, we would like to operate around 8.5, 8.9% gross spread. So we'll adjust if the cost of borrowing comes down, we would like to pass it on to the customers.
What disruption is on the anvil for a NBFC which is in vehicle and which is in PV financing? Do you think you also could get challenged by fintech, or fintech is unlikely to hit you?
See, it's always been my stand for the last few years that see, more than disruption, I would look at fintech as a partner. I would like to use their technology to deliver better services to my customers. So I always say that bank, NBFC and a fintech, same ecosystem. So we should partner each other to grow the business and also to reach more and more underserved customers.
Any business from fintech where they're acting as channel partners for you?
No, we do have, but it's not much. We did work with Paytm. We have about 150 crores of exposure there. And it's performing well. Even today, the book is performing well. Similarly, with a couple of small fintechs, we work with them, but the exposure there would be less than 100 crores. We are more keen on working with them on how I can use their technology to assess and deliver credit to my customers.
If I look at the two categories of the loans you have, CV 50%, PV 20%. Will the mix between PV and CV remain the same for next 2-3 years?
See, right now the PV market is really on a roll. So, but at the same time, because of the boom in construction and infra, the market for commercial vehicles, tippers is also doing well. So probably next 2-3 years, yeah, you're right. There may not be much of a change between the mix.
Okay. Can you also walk us through your outlook when it comes to your AUM growth? Because you had guided for about 15%. Can you walk us through whether or not you'll be revisiting these numbers now?
No. For the current financial year, we are confident we will cross those numbers, as I said, definitely. So too soon for the next financial year to comment because we have not yet gone to the board with our business plan for next year. So once we go to the board, I can come back and tell you what we are looking at next year.
Okay, so FY25, looking at the base effect which would kick in, if one has to understand your business, you are still confident that you will grow at nominal GDP plus 3-4%. I mean, that makes it 15-16%.
Yeah. That is we are pretty confident.
And you don't see any slowdown whatsoever. Why am I using the word slowdown? I look at the CV dispatch numbers. CV dispatch numbers which come on a monthly basis are showing signs of plateauing out.
See, we are, as you know, we are largely a player in the replacement market, in the used segment market. And the used segment market is actually picking up now. Earlier, it was for a couple of years. I mean, COVID and post-COVID, it was subdued. Now the market is picking up because they have done well. The new CV market has done well in the last 1.5 years. So the used vehicle market is also picking up. So I don't see any slowdown in that business.
Okay, Mr. Chakravarti, great to have you today on the show. Thank you so much for taking the time out and joining in.
If you like this video, then like, share and subscribe to ET Now.